Dharmesh Shah, the guest, is joining us on the show to talk to us about just that. Dharmesh, hi, good to be speaking with you. Yesterday, there was a strong rally at our hands wherein we saw that big gap up or short covering in the last 30 minutes itself. Today as well, the momentum is building up. Do you see that this 22,500 level will be attained and from there on it will only trend higher as we move closer to election?
Yeah, good afternoon. Definitely, if you look at the last 2 day trading pattern for the market, all dips are getting bought into. I think so. To buy the dip should be the strategic daily indicating. If you look at the market, I think yesterday trading session at 22, 100, 150, we have seen a good recovery in last half an hour of the session. So yes, definitely, I think so. Buy the dip should be the strategy. And going forward, yes, 22,500 was been acting as a stiff resistance for the Nifty for a long time. We believe, I think so, market should surpass this level of 22,500 and we should be challenging the life high the next week, which is around 22,800. But eventually, to talk for the medium term picture as we are into the election outcome, very near to the election outcome, we believe the volatility will be there. So such volatility, one should not get worried for such volatility. Others use this volatility as a buying opportunity. So eventually, we believe, I think so 22,800 is a near-term target for the Nifty. But one should look at the medium-term picture. It looks like that the market should be heading towards 23,400 in the month of June. So overall, I think so buy the dip should be the strategy. As far as support is concerned, we believe 21,900 to 22,000 will remain to be the strong support for the Nifty in the coming few trading sessions.
Okay, so that's the support and the next level to watch out for on the Nifty. But Dharmesh, what about individual stock moves? M&M is at record high level, very strong, momentum on the likes of Crompton, Info Edge, as well as Dixon. Which stocks would you like within these 3-4 as still a buying opportunity, if any?
So M&M, after the strong sets of numbers, we have seen a good recovery in M&M with today's trading session after gap up opening. M&M looks to be much positive because on all the time frame, if you look, I think so M&M has been higher top, higher bottoms, all the degrees, if for weekly, monthly, or even quarterly. So yes, M&M looks positive for target of around 2,700, keeping a stop loss of 24.25. Apart from M&M, I would like to highlight two stocks in your channel. I think one is on the banking side, State Bank of India. If you look at the PSU banks as a whole, I think so they have seen a good correction in last few trading sessions. But overall, I think so if you talk for SBI, I think so SBI has been relatively outperforming even in this current corrective phase. We have hardly seen any major correction in SBI. It's still trading above 800 and also has witnessed a breakout from the rising channel. It looks like, I think so, the SBI can be looked for a target of around 890, keeping a stop loss of 745. Apart from SBI, on the large cap side, we remain to be positive for capital goods as a sector. As a sector has been the outperformer in 2023 and continue its upward journey in 2024. L&T, again, a good proxy play to defense, construction, and capex play. I think so L&T is the biggest beneficiary going forward. And post results, we have seen a correction of around 16% from the life high in L&T. But in the current corrective phase, I think so the stock has seen a support at 200-day EMA and also the long-term rising trend line joining the lows of Jan 2022 and March 2023. It looks like L&T can be looked for a target of around 37.55, keeping a stop loss of 3,100. So L&T, SBI, and M&M remains to be a top pick.
L&T, SBI and M&M, those are the top recommendations coming in. Thanks, Dharmesh, for making time and speaking with us today and talking to us about your top recommendations.
If you like this video, then like, share and subscribe to ET Now.